We're glad to have you back. Like I said, my guest is development economist, Professor Ken Ife, to help, analyze the same issue, NBS releasing the GDP figures for last quarter of 2025. And of course, other developments, particularly in the oil and gas sector, we'll be touching on that too. Prof, good afternoon, and thank you so very much for your time.
Good afternoon. Thanks for having me. Yes,
Prof, 3.98% is where we are. And some will say, well, better than what it used to be, 3.86% to 3.98%. What's your understanding of these figures from the NBS?
Yeah, you look at the cyclical pattern of GDP growth rates, because it depends on which part of the season we are, whether we are in production season, whether we are planting season or harvesting season, and whether we are approaching some Yuletide season. So all of those. So in terms of compared to last year, the third quarter of 2024, we did better at 3.98, considered compared to 3.86. But compared to last quarter, the previous quarter, second quarter, we did marginally less, because that was coming in at 4.23, and we are at 3.98. But there are many interesting things about the figure when you look at the breakdown. You see some significant shifts, especially where I saw some green shoots. I think I'll come to that. But broadly speaking, the oil and non-oil ratios are broadly the same, except that this time round, the growth rate for the oil production, you couldn't expect it to be as high as it was last quarter. Last quarter, it was 20.46. You couldn't expect it to get higher than 20.46. It still increased, but it was 5.84 compared to, that's what happens when you have a huge growth, and then suddenly the next one looks as if it was small. That is it's significant, because we are still punching at 1.64 million barrels a day compared to 1.47 million barrels a day this time last year. So, but one little thing is that the share of the contribution of the oil to the GDP, overall GDP, actually dropped a little bit. It was 4.05 in the previous quarter, and then now it's 3.44. That also automatically means that non-oil has grown to 96.56. So that's just but the growth rate of the non-oil is still positive, is higher than it was in this second quarter, because it's 3.91 compared to 3.64. So that is constantly increasing marginally, but it is definitely improving.
So, Prof, would you say that our economy is now, should I say, diversified?
Yeah, I think I was going to come to that. I said there are some green shoots that makes me more confident about much more robust domestic diversification. Now, if you look at the metal area, the mining and metal area, their growths are phenomenal. The metal ore was growing at 59.11%. That is high. It's even beating the banking and finance industry that used to return 20%, 29, 30%. Now, the second component, which is the coal mining, that is also coming at 57%. Then the third component, quarry and mineral, coming at 39.46. So all of these three that are connected to mining and mineral and all that, they're all punching at significantly high rates. And that shows you that that sector is coming up. And they're going to get very, very important. Then there are some other areas like rail transport that was coming at 33%, and insurance. Insurance and finance are in the same boat, because it used to be finance and insurance. So both of them together, we are giving about 20, just a little over 20%. Just call it 20%, 19.63. But when you disaggregate the two, you find that insurance was performing the finance, because the insurance itself was coming at 20.78. So that was slightly above, but it's still part of the same aggregate of 19.8. So it's not a great difference. But in terms of proportion, you know that the banking is much, much heavier and higher than insurance in terms of both contribution to GDP. But the overall contribution of the financial sector to GDP isn't that great, because it's about 2.65%. But the growth rate itself is what is quite high. There are other ones. So I didn't talk about agriculture. Agriculture is also very promising because agriculture came at 3.79 compared to the last time I was screaming when it came to 2.82. And the first quarter, it was 0.07, complete meltdown in the first quarter. So agriculture is showing some great signs of improvement. And we are even seeing that in the market, seeing it as it is a reducing inflation significantly, because food is what is driving down the inflation that we are seeing now, heading to single digit in no distant future. So that's that. But industry is a lot slower. Instead of 7.45 he gave us last time, it's now coming at about 3.77. But overall, the great driver is always the service sector. The service sector is about 3.94%. But consider that the service sector itself is about 53% of the GDP. So the service sector is the biggest component of the non-oil sector because it accounts for about just over 53%. Then all other sectors that are showing growth, but not really in terms of contribution to GDP, are trade. Trade, as you know, the growth was low, 1.98, but the contribution of growth of trade is about over 16%, about 16.4%. So it's very high proportion, but low growth. But ICT, as you know, always have a reasonable growth, comes about 5.78. But then in terms of proportion, just around 9.8, just between 9 and 9.5. So you can see those two, they have contribution to make. But when you compound the ICT and banking, you get a huge aggregate. Because what happens is that the weight of the ICT and the growth of the banking and finance, because both of them have a common denominator, technology. When you aggregate to the combined impact, is more like 25 to 27% of the entire GDP. So that is very, very important because don't forget, ICT is a common denominator across all sectors of the economy. So, but it has the greatest impact on fintech, financial services, all kinds of technologies around SEC and all of that. So taken together, they portend a great future for our economy.
I asked a question on my earlier guest with regards to services sector because I was worried about the performance, but in its totality, it still contributed so very well to the GDP. What do you think we would wrap the year up with regards to GDP figures, Prof?
In the last quarter, we tend to have a much higher performance in the last quarter because there's a lot of spending going on in the last quarter. And don't forget that people have ordered goods, a lot of them coming in from abroad, and they're all going to be consumed. So you're going to see a lot of consumption, and it will be picked up. So by January, February, when you announce that last quarter, you will see us go across the line. We might get on aggregate over 4% growth on aggregate. That's my best guess.
All right.
And then of course, lowering of the inflation, and then also, you can see some states giving 13-month salary, so it's all inducing spending behavior. And then you've seen the government also accumulating some grains and the gari and all of those to give out. So, there's a lot of stuff that are going to hit, and petrol prices are going to further slow down inflation, and it's not going to cause the aggravation that it used to cause. So there are things that could portend, and because the costs are going to come down because of lower transportation costs, consumption will get a lot higher. So I see that might be a lot better than what we have, and it will push everything over 4% in the aggregate, because you're going to have to add quarter 1, 2, 3, and 4 before you average it out to see what the entire year is going to come to. So that's my guess.
And
but
Prof,
I wouldn't also forget.
That is noted, and it's in my diary, Prof's prediction for end year. You touched on the oil and gas industry. You talked about fuel prices, availability of fuel, and that's been something that we really need to commend government and, of course, private sector players with regards to availability of PMS during the Yuletide season. So now, Mr. Dangote is out again, and he says, now we are pledging 1.5 billion liters of petrol monthly. NMDPRA, NUPRC, we need all hands to be on deck. We read this yesterday, and it's everywhere. I'd like you to also react to this and what impact it would have specifically on the availability and pricing of PMS.
That is massive assurance and reassurance to the public that not only that you're not going to have the queue, they piloted that last December, but you already have more infrastructure rolled out to ensure that the CNG infrastructure, to ensure that we're going to have the fuel. And now confirming that, in fact, 1.5 billion liters are going to be available all day within a month. They have their reserves, but they're already producing 50 million liters a month, which is in excess of our monthly demand. So, you know what happened in the last time is that while they were producing 45 million, only about 20 million was going in, and then the other players were giving them impossible conditions, and then they were having to export their 25 million barrels, and then they are also importing all kinds of substantive. But I want to say this. Dangote has now written a letter to NMDPRA inviting them. I'm going to have to ask Farouk and his chairman and his board to please go and visit Dangote. The president has gone to visit Dangote. Dangote is our own. He's not a stranger. It's not a multinational oil company expatriate. No. Please go and visit this company. And don't forget that it is not just Dangote. It is about this country. $50 billion is going into Ondo on huge refining operation. Bua is going to Cross River, similar refining. We have modular refining. This whole landscape has changed, and they will change for good. So please accept his hand of friendship. Go and visit. Take your team and go and visit Dangote refinery. Go and see. Go and inspect the refining, the laboratory, the internationally accredited laboratory. So let us mend fences in the interest of this country. This war-like attitude and all this is not going to pay anybody. We don't want to destroy ourselves in this process. Please go and visit and then take the figures that they are going. You go and inspect the figure. Go and confirm for yourself that they have capacity for 50 million liters a month. So that you figure you are putting out about 18 million doesn't tally with it. Go and check and confirm. You have a field day. Take any experts you want and go there. Let us have peace so you can rein in the unions that are causing all this problem, and then those who are importing. We don't say they couldn't import, but let us follow the rule. The rule says, the IPIA, that you have to satisfy local demand. And I'm asking you, NMDPRA, to support the president to put 5% ad valorem tax on the upstream, those who do not meet our requirements to supply the crude to the local refiner, then tax them 5%. And let that go to coffers and then increase our revenue. But because it's not fair.
You know that I always ask you this question when we talk about marketers and all of them being involved in that market. And many said, even before the PIA, that it's going to open up the market, liberalize the market, allow for competition. So where do we have competition when everything is swinging towards one side?
No, we do have, there's nothing like swinging to one side.
Okay.
To begin with, the current capacity of Dangote, 700,000 barrels a day, compares to the 4 refineries that NNPC had that are dead.
Yes.
To all intent and purposes. And also, can you now imagine when the $50 billion refinery in Ondo comes on stream, it will be equating to Dangote. Can you imagine what capacity Bua will bring in? Can you imagine some of the others? They're asking the 30 people who have licenses. 3 modulars are coming in. So there's a market for everybody. And then Nigeria imported $10 billion refined petroleum last year, 2024, compared to $20 billion imported by Africa. So even the 20 billion is good business for all of them. And not to talk of Dangote is even supplying to Saudi Arabia, America, Gabon, some African countries, and it's going to go heavy on the Southern African, and then also it's due to Brazil. So the market is there. We have to capture this market. And it's not rocket science, because you go to Texas, even with their 20 billion barrel reserve, they have 32 refineries. with about 5,000 petrochemicals surrounding them, and they're all producing for export. So why could we not beat these guys? We're already beating them. Some refineries are closing down in North America, in Europe. Many more are going to close down because they've expired, they've gone past their useful life. And they are not turning out quality fuel that meets the international standards. They're just sending us, substandard fuel. You go to Lome and then you mix it with some of these things coming from from our artisanal refiners, and then pour all kinds of ethanol there and bring it here. Standard is not met. All the octane number, pour point fuel, all these numbers are sulfur content way out of the limits. So, and then if you say, look, even at $0.62 per liter for Nigeria, even with the addition of the 15% ad valorem tax, we are still half the price of fuel in Ghana, and then 1/3 in Sierra Leone and not Sierra Leone, in Côte d'Ivoire and Senegal. So if there is business to be done in importing, why don't you import and go and sell in Ghana and make 100% profit, or go and sell in the other countries and make 200% profit? The fact remains that there are issues. It's not purely about importing this and selling it in Nigeria. There are other things that border on criminality. And I'm saying to the NMDPRA, please call a spade, and then let's get on the right side of history, so that you'll be remembered as the real driver of this industry that brought sanity and they delivered economic sovereignty to Nigeria and Africa. Right. Please, I'm begging you. You are leading Africa, not just leading Nigeria. Go and make that visit so that you put it in good stead to await the others that are coming in. The other modular refinery, Bua refinery, Ondo refinery, open the door for better competition.
All right. Prof, thank you so much for your time. And I like that analysis, I must say. Development economist Professor Ken Ife joined us live from Abuja. Do enjoy the rest of your day. Thank you so much, Prof.
Thank you. Such a pleasure. Thank you.
All right, then.